Sharp drop in Deutsche Bank shares. Statement from Germany. German Chancellor Olaf Scholz stated that despite the sharp decline in the value of shares of Deutsche Bank, Germany's largest market share bank, there is no need for concern as the bank is a highly profitable one. Scholz responded to questions from journalists at a press conference held at the end of the European Union EU Leaders Summit in Brussels, where global market developments and the situation in European countries were discussed. Scholz emphasized that the European banking system is stable, and that banks in the EU are subject to strict scrutiny and have strong capital resources. When asked whether the German federal government could offer a rescue package to Deutsche Bank in an emergency situation, Scholz responded, "There is no need to worry about anything." Scholz also commented, Deutsche Bank has completely restructured by modernizing its business model and is a highly profitable bank. Following the recent interest rate hike by the U.S. Federal Reserve, stress in the banking system has continued to increase, with Deutsche Bank shares falling by over 12% today, dropping below $8.30. The share price has reached its lowest level in the past 5 months. The cost of credit default swaps (CDS) for the bank's bonds has risen by over 40% in the last 3 days, reaching 220 basis points. This means that investors have to pay euros 220,000 to secure a euros 10 million package of Deutsche Bank bonds. The Stoxx 600 banking index in Europe fell by approximately 4% today, and Commerzbank, another German bank, also saw a decline of over 5% in its shares. The bankruptcy of Silicon Valley Bank in the U.S., as well as the more than 25% decline in the shares of Deutsche Bank and Commerzbank since the start of the banking crisis 2 weeks ago, have drawn attention. Concerns about the health of the global banking sector have been exacerbated by developments at Credit Suisse in Switzerland and the bankruptcies of Silicon Valley Bank and Signature Bank in the U.S. since the start of the banking crisis, putting pressure on European banks since March 17. Many investors are concerned about the contagion of the confidence crisis to other financial institutions since the emergency bailout of Credit Suisse by its competitor UBS. Banks in Europe have been under pressure since the AT1 bonds, which are capital-like debt instruments with a nominal value of CHF $16 billion, $3 billion between UBS and Credit Suisse, were raised. The rescue of Credit Suisse caused volatility in European markets due to the pressure on bond prices, and the CDS of other major financial institutions such as UBS and Societe Generale also increased today.